Hello, everyone. Good morning from this part of the world. And depending on whichever time zone you're tuning in from, good afternoon and good evening to you. Welcome to the first edition of our Forex Morning Mastery for the new week. And I do hope you all had a fantastic weekend. And how are you feeling? And hope you are feeling fired up for the week ahead. Um, Today we have got some special development lined up as we are adding another asset into our watch list. No, is it adding? I think it's replacing, I guess, this time around. So we are replacing the GBPUSD with the USDJPY. And it's been a while since we've done something on the USDJPY right here on the Forex Morning Mastery. I think the last time we monitored the USDJPY here was in February. That's about eight to 9 months ago. And of course, I decided to put on hold the GBPUSD due to the olden situation we see there in that market. Market has been very indecisive in the last 2, 3, 4 weeks in that particular market. So as a result of this one, I decided that let me just stay out of that market, let it gain some momentum in a particular direction, then I will be coming back to trade that asset. So I thought of which asset to replace it with, and while looking through my favorite assets, the USDJPY seems to be looking very promising. So I decided to include it into our watch list for this week. So for the USDJPY fans, that's the good news for you guys. Um, so we are diving into its latest development and the driving force behind it. Now, for those of you who are new with us here, welcome. This is where we break down the market and get into the nitty-gritty of what's moving prices. And we usually do this 3 times in a week. That is Mondays, Wednesdays, and Friday at exactly 8:30 a.m. UTC, 9:30 a.m. West African time. So during the Forex Morning Mastery, we focus on strategic market insights, trade management, and real-time discussions, especially on assets I usually monitor on a weekly basis. So it's a tradition for us here to monitor the USOILSPOT, the GBPUSD, and the XAUUSD. However, in situations like today when I'm not using the GBPUSD, I replace it with one of my favorite assets, which is the USDJPY. So we are all about making ourselves a better trader here. So you are highly welcome and feel free to engage in the comment section. If you have any questions whatsoever, feel free to drop them in the comment section. In preparation for this week, we have 3 assets as usual: the USOILSPOT, the USDJPY, and of course my favorite asset amongst them all, which is the XAUUSD. And before we even go into today's session, it's also I think it's reasonable that we also congratulate ourselves for last week's performance. We did very well on the USOILSPOT and of course on the XAUUSD, where we saw the gold hit an all-time record high last week. In fact, it has even broken that record as at this morning, and we are going to be looking at that in detail. So, prior to today's session, just to give us an hint into what to expect, on the USDJPY, there has been some little bit of uncertainty around the Bank of Japan's next move. And of course, the geopolitical tensions in the Middle East is further making that asset a little bit complicated. But today we are going to be finding our way through, cutting through the noise, and deciding if we are going to be buying or selling. Then on the gold, well, the safe haven asset is still on the rise, supported by global economic uncertainties and weakening sentiment on the US dollar. So we are going to break that one down too. And of course, you don't want to miss out on our analysis on the US All Spot, where China's recent rate cut is probably going to be a positive signal for buyers of the US All Spot. So we are going to be discussing how this impacts the demand and how we can position ourselves for the long term. So this week promises to be an exciting one. So I encourage us all to stay tuned in, engage, and let's make the most out of this session. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And by monitoring the economic calendar, we obviously want to be pinpointing potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information we need, and most importantly, timing, so that we can position ourselves strategically ahead of this event. Now, based on the assets we are looking at for this week, we are going to be focusing on high impactful event from both the United States and the Japanese economic docket. Now, after looking at the economic calendar for this week, it's very, very scanty indeed. The only major event that will be driving the sentiment around the asset we are monitoring for this week is coming in much more later in the week, and that is on Thursday from both economy. Of course, we are looking at the S&P Global publication from the United States, and of course the consumer price index from the Japanese economic docket. However, before this high impactful event, we have a bunch of mid-tier economic features that everyone in the market will be looking forward to navigate the current market dynamic. And if you look at this here on Monday today, that is October 21, the first event you'll see here is from the United States, and that is the ongoing IMF meeting. And of course, for those of us who do not know what this is an event. I think it's an annual event where it's a meeting, of course, where they focus on global economic challenges like inflation, debt relief, and sustainable growth, and the likes. And for the forex market, this discussion could lead to shifts in monetary policy affecting major currencies like the US dollar, which is one of the major assets we are monitoring, and of course the Japanese yen. So it's one event everyone will want to be looking forward to watch out for the rhetorics from the stakeholders in the financial landscape to decide how they will be weighing in on the positions that that are involved in this regard. Now, besides the IMF meeting today, we are also looking forward to some bunch of speeches from the Federal Reserve officials. We have one coming in about 3-4 hours from now. That is the speech from Logan. That's 12:55 p.m. UTC. Logan is the Federal Reserve Bank of Dallas president, and of course is also a member. Is a non-voting member of the FOMC committee. So of course we want to hear what he's going to be saying. Kashkari too is there much more later in the day. She's going to be speaking. She's a non-voting member of the FOMC too as well. Then we have Schmid coming up later in the day, another non-voting member of the FOMC, and later Mary Daly, one of the most popular Fed officials. She's the Federal Reserve Bank of San Francisco's president, and she's a voting member of the FOMC committee. And this speech here will be giving market an insight into the economic outlook and of course potential policy decisions that might likely happen before the end of the year. So these are events we want to be looking forward to. I will definitely be focusing on what Mary Daly is going to say. So Mary Daly's speech is coming up around 10:40 p.m. UTC later today. So you want to be marking out that timing. By tomorrow, I should be giving us an update into what it says in my commentary on both my TradingView and Telegram platform. So these are the events we are looking forward to today to help market participants navigate the current market dynamics. So with that said, we shall be diving right into the business. So as always, the first asset we are going to be taking on this morning, let me see. So the first asset we are looking at this morning is going to be the US All Spot. Of course, we've had some quite interesting situations on the US All Spot in the last couple of weeks. I think last week we were privileged to join a massive sell-off at the beginning of last week, which gave us about 350 pips in profit before the market went into a consolidation phase throughout the second half of last week, further emphasizing the prevailing uncertainty in this particular market. And of course, before we go into the technical details, we do want to have a deep understanding into the drivers in this market. That is what is driving the sentiment both positively and negatively behind the scenes. And one of the latest developments is the People's Bank of China's decision to lower the 1-year loan prime rate, which is called the LPR, to 3.1%, and the 5-year LPR to 3.6%. And this development is expected to stimulate economic activity. Borrowing costs will be much more cheaper, so business owners will be willing to borrow money, and this could lead to a tight labor sector. And of course, China being the largest importer of crude oil could lead to increased domestic demand for crude oil. And this is one thing that I still feel that buyers will see as a positive signal to start considering buying the US All Spot at this point in time. And besides this rate cut from China, we also had a good news as regards to their GDP for quarter 3, which came out, I think, between yesterday evening and this morning. And despite a slight slowdown, China's GDP growth for quarter 3 still surpassed what market had expected, potentially supporting whole demand at this point. Then we also have the geopolitical tensions in the Middle East. When there is this kind of escalation, the appeal for oil usually increases due to the concerns of oil disruption from this particular area. And of course, the expected retaliation from Israel is still on the table, which is still bringing in some level of uncertainty in that particular market. Now, despite these positive drivers, we cannot ignore some negative drivers that could exert selling pressure on the US All Spot. Now, I talked about China's GDP growing and even grow more than what market had expected. But one thing we should also acknowledge is the fact that despite this growth, there has been a slightly slower pace in quarter 3 if we compare it to the data that came in quarter 2, which is reflecting a softening economy that could weigh on oil demand. Now, in the Middle East, though the escalation is still there, there is reduced concern over oil supply disruption from the region due to easing tensions between Israel and Iran, and this could probably send price crashing to the downside. We never can tell. And of course, we also have a pipeline leak in Singapore, though contains it's still not a very significant thing, but it could affect the supply chain issues, but does not really have a major impact on oil prices at this point. It's just for us to know what is going on behind the scene. So this factor shows a mixed outlook for US oil, with China's economic actions providing potential support, while geopolitical and growth concerns may limit price increase at this point. Now, with all of this we have said here, how does the participant in this market digest this information? And of course, for us to understand the sentiment in this market, we will look at price action, which will be giving us an insight into the behavioral patterns of market participant in this environment. Now, my first point of contact for this week is going to be on the 4 hours time frame, where I took into account the character of price action in the last I think I went to as far as the month of August. That's about September, October. That's about 2.5 months of historical data. And the first thing you would quite observe here is the fact that price action has been very bearish, and as a result we have a descending trend line after connecting this series of lower highs. Now, since price action tested the lowest point in the last 3 months, that was around the $65.50 level here, that's about a month ago, we saw price begin to find higher highs and higher lows, giving us a temporary ascending trend line, which for me is going to be playing a significant role in guiding our trading decisions for this week. Now, look at what happened here. That was about at the beginning of this month. We saw price break out of that descending trend line, coming back to that particular area just around that ascending trend line. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying this asset. Now, in addition to these to these trend lines we've identified here, we need a key level that will help us to navigate the current market dynamic this week. And you know how we use our key levels. It serves as a significant determinant of how we position ourselves in the new week. So if price remains above the key level, we definitely want to be looking out for patterns and structures that support the idea of buying, but we will consider only selling when price breaks down the key level. Now, my key level for the incoming week is going to be at the $69 area. In fact, look at how that is. In the last 7 to 8 weeks, this area had been a support and resistance at some particular point in time, and in fact it has played a significant role in determining the direction of price action. So look at what happened here. In September, a demand zone, we saw price break down, retest the structure, price climb back up again. In mid-September, we saw a breakdown around this particular area, and then we saw price climb back up again at the beginning of this month, and by the end of last week we saw price close exactly at that $69 area. So will this momentum continue from this particular level? Well, let's scale down into the lower time frame to see how the market has been reacting to this confluence around the key level at the $69 area, and of course that ascending trend line. Now, to understand this, we will scale down into our execution time frame, which is on the 1 hour time frame, and this is what I was able to come up with this morning, and this has of course helped me in triggering a buy position at this point. So if you look at the structure here, so you can see the key level at the $69 area, and of course you can see that ascending trend line we marked out right there on the 4 hours time frame, very much intact. Price still trades above this level. Now we saw a little bit of consolidation phase above this area, where price initially for the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours of the new week, price was confined within the $69.70 level and the $69 area, emphasizing the prevailing uncertainty in this particular market. And of course, the inability of sellers to break through that support line of that range bound structure, which doubles with our key level for the week and the ascending trend line, was a beautiful signal for me that buyers are still strong in this market, and we may likely see this area serve as a platform for new buying opportunities this week. And this led to my buy position around this area, then adding another one at the breakout of the $69.70 level. And currently we have I have about so the first position is about 100 pips, and the second one is currently running with about 48 pips. Now, for those of you who actually took advantage of this opportunity based on your understanding of our analytical approach, in fact, well done and kudos to you for identifying the setup. But for those of us who had missed out on this opportunity, it's all well and good. It's still the first trading day of the week. The week is still quite early, so we still have a lot of opportunity to catch any new trading opportunity the market will present to us. Now, if you had missed out on this opportunity, I will not advise you to jump in front of a moving train. Instead, let's wait for this train to get to the next bus stop, then we can board the train at that point. Now, where is the next bus stop at this point? So with the situation we have right now, we've seen how price action has broken out of a critical structure, that is the resistant line of that range bound structure we identified earlier. Now, theoretically speaking, when price action breaks out of a key structure like this, we do expect that at some point in time price will come back, retest the structure in an attempt to continue the uptrend move. So let's hope that this will happen. If it does happen, we want to be positioning ourselves right around that resistance line at a retest of structure. The emergence of buy pressure around this area on our lower time frame, like the 5, 10 or 15 minutes time frame, will give us a good opportunity to join that uptrend move. However, it is not all the time that the market comes back to retest the structure. In fact, if the momentum is very, very strong, you will just see price continue to find higher highs and higher lows. So if that is going to be the case, are we going to miss out entirely on that opportunity? Well, we do not want to do so. Now, how do we navigate those kind of situations? Well, we want to be identifying another structure which is somewhere around here. Let me go back to as far back as last week Tuesday, and I think we'll be able to see a structure to work with. So I'm looking at the $70.25 level, so somewhere right here. So let's just mark that out, and I would love to give it a different color instead to emphasize that. So we have the $70.25 level, and so we give it a coffee brown color right here, and look at what this is. So now if you go to as far back as last week, you can see how this area has been a demand zone at some point in time. Look at what happened around this area, and if you look at the character of all of these candles around this area, you will see a lot of hammer candles and even engulfing bullish candle spring out from this area. So for me, this area reflects strength in buying power at that point. So price is gradually approaching that level again, as you will see here. Now, if price action goes ahead to break out and retest the $70.25 level, we definitely want to be adding another buy positions there. And for those of us who missed out on that second one, well, a breakout retest of the $70.25 area will be a beautiful opportunity to join the uptrend move. Now, in as much as we are looking out for buying opportunities here based on the current structures we have identified, we will not ignore the potentials that sellers can actually come into play. We talked about some factors like the easing geopolitical tensions in the Middle East, which has reduced concerns over supply disruption from the region, and of course the slowing economic growth in China as well, which could influence some negative sentiment around the US oil commodity. We need to take into account what will happen or how we are going to join a bearish opportunity if that situation reflects in the market. Now, for me to consider selling the US oil spot, I will rather want to wait for price to break down that ascending trend line we marked out on the 4 hours time frame, which is just right here. And interesting enough, it shares a confluence with our key level at the $69 area. So if price can break down the structure, then I will start considering selling the US oil spot, as at this point price would have taken out all the buy positions around that area to trigger selling ideas. So I would rather want to see a breakdown and, if possible, a retest of structure. Remember, we could still see a false breakdown happen around this particular area. So instead, I would want to exercise some patience, wait for price do some retest of structure before jumping into a sell positions from there. So that is the only condition in this market that will make me sell the US oil spot today and for the first half of the week. So this is my simple view on the US oil spot. I hope I made myself clear. And for those of us who were lucky enough to capitalize on this buy opportunity at this morning, please, I will advise you to move all stop losses right now, secure some profit from the current position anywhere around that second entry at the $69.70 level. Seems most appropriate to move all stop losses to. And please remember, you want to be given enough breathing space for price action to move around. So this is my simple view on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned. All right, so I see a couple of comments here. Good morning to you, Wokocha. Good morning to you, Torres Master. Good morning to you, Jonah Aruna. Trust you guys are doing very well. Glad to have you around with us this morning. So in the absence of no questions, I will take that as a confirmation that we are all on the same page. And I do hope you have marked out these levels accordingly on the chart, as we are definitely going to be banking on them, and they will be serving as a reference point to guide our independent trading decisions today. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is my newly introduced asset into our watch list, which is the USDJPY. That is the US dollar against the Japanese yen. And of course, I already done a top-down analysis on this asset during the course of the weekend. I hope you watched that video where I analyzed from the daily into the 4 hours time frame. So please, if you are yet to watch that video, I encourage you to go ahead and watch that video. I think it's the recent video on my YouTube channel, and of course you can find it on my TradingView and Telegram platform. So I encourage us all to watch this video so that we can have a background knowledge of how we got to the point we are going to be looking at right here on the 1 hour time frame. So I would not be going into the higher time frame during the course of the session. So please go ahead and watch that video to have a deep insight into how we got to this point. So from a fundamental perspective, of course, the last couple of weeks I've seen the US dollar, it's a 3-month high, and data coming in from the United States in the last couple of weeks has been quite impressive. The labor sector has been doing very well. Inflation is easing in the United States, and consumer confidence also is growing. We also have the service sector doing very well. The manufacturing sector still struggling to gain some traction, but in a general outlook, the US economy has been very resilient, and as a result of this, we have seen a significant growth in the US Treasury bond yield, which has positively influenced a positive traction in favor of the US dollar. So the renewed buying of the US dollar, driven by strong market sentiment and elevated US Treasury bond yield, continues to put pressure on the Japanese yen at this particular point in time. And of course, the ongoing conflict in the Middle East, including escalated Israeli airstrike, raises risk of further instability, affecting market dynamics and pushing traders to refrain from aggressive bet on the Japanese yen due to its risky nature. And of course, the lesser interest is the one with a lesser interest rate compared to the US dollar, making it a little bit not too attractive for investors to put their money on. And another factor that could influence the US dollar during the course of this week is we've been hearing in the last couple of weeks that the Bank of Japan will likely intervene due to the weakness of the Japanese yen, but the lack of clarity on the timing and the scale of future rate hikes by the Bank of Japan continues to weaken the Japanese yen's ability to recover from the recent lows. However, in as much that all fundamental drivers behind the scene is in support of the US dollar, we cannot ignore some certain drivers which could still influence the Japanese yen, which the Japanese yen could still rely on to boost the traction in its favor. Now, there is this cautious approach lately from the Japanese, the Bank of Japan's governor, that is Ueda, remarked during last week about focusing on the economic impact of unstable markets and risk from overseas signals that the Bank of Japan is in no hurry to raise rates. And this stabilized the market sentiment from that particular end, but the value of their currency may still take a hit on this one. However, if the ongoing speculation that the Bank of Japan might intervene comes to fruition, we may likely see some positive traction in favor of the Japanese yen during this week. That is if it happens. Now, that's another factor here. Then the launch of 2 funding schemes by the People's Bank of China, which supports development of capital markets, boosting global equity markets, and it may likely influence the Japanese yen due to the area they are in Asia. This whole thing, it could indirectly influence sentiment around the Asian market, where the Japanese yen is also found. But I still strongly believe that the path of least resistance for the Japanese yen at this point in time is still to the downside due to all of these factors put into play. However, let's look at what the market participants are saying and how they are digesting this information, as this mix of speculative intervention, support for the yen, and external market influences such as the strong US dollar performance and geopolitical risk creates a, let me say, complex outlook for the currency. Now, on the 1 hour time frame here, that is our execution time frame, we have a simple trading setup to help us navigate this current market dynamic today. Now, I do hope you've watched my video on the USDJPY, so you can have a deep insight into how we got to this point. So on the 1 hour time frame, which is our execution time frame, you can see in my video I was able to mark out the 150.00 area as our key level for the week, though price is trading below the key level, and this key level also is serving as a strong selling niche since last year October. So this time last year price action was around this area, and of course we saw price drop from that particular area. That was last year. The same thing also happened in February of this year. We saw price drop significantly from that particular area, that is the 150.00 area. Now price action is back into that territory. Will it drop from that area? That is the question we are about to find. We are about to answer here. Now, looking at the structure here, as at the beginning of this week, I was able to identify a range bound structure where initially for the first 8 to 10 hours of the new week, we saw price confined within the 149.650 and the 149.100 area to emphasize the prevailing uncertainty at that point in time. Now, one thing that made me cautious about buying right away after citing the continued buy pressure around this area this morning was simply because of the fact that price action was trading below that ascending trend line we spotted in my weekend video on the USDJPY. So I was of the opinion that we may likely see price do a retest of the trend line to incite a downtrend move, that is from that area where price action started this week. So as a result of this, I identified this area as a temporary supply zone, as you will see here, and then if price breaks out of the structure, I will be willing to buy the breakout of the 149.650. So this was the justification for my recent buy position, which is currently running with about 32 pips in profit, and I already moved my stop losses to break even here, just in case price action drops to the downside. So going into this week, this is what we are going to be using to navigate this current market dynamic. Now, for those of us who missed out on this opportunity, let's exercise some patience and let's see how the market is going to play out around the 150.00 area. So as we can see, price is right around that area, an area which I've called a strong selling niche. Let's see what happens. Are we going to see a reversal setup like a double top structure from that area, head and shoulder, or rising wedge, where the breakdown of the neckline will be a good confirmation for us to sell? And another interesting thing about the 150.00 area is the fact that it also lines up with one of the major ascending trend line we spotted on the 4 hours time frame. Now look at what we have here. So following the breakdown of that ascending trend line right here on Friday last week, we may see a situation where price could be retesting the trend line there to incite a massive sell-off to the downside. So we are at a crucial juncture here where both the ascending trend line and the key level for this week shares a beautiful confluence. So for those of us who are actually taking that buy position, kindly move your stop losses, secure your profit right now. We never can tell what could happen from this 150.00 area. So we want to see what happens. It could take about 2 to 3, 4 hours before something comes up, but let's exercise patience and see if it's going to be more of selling pressure around this area to push price to the downside, or price breaking out of the structure to give us an opportunity to add more buy positions to our existing trade. So let's see how the market will play out from here. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update as at when due. So the current buy position should be secured adequately at this point while we wait patiently to see how price action will be reacting to that 150.00 zone. Then another thing I would like to add to the current structure we are looking at here is the trend line, which acknowledges the lower highs since last week Thursday. So if I bring out my line chart here, I think I should be getting something like this. I would like to give this a red color. So I'm not sure this will work with the I think it should. Okay, so let's just place it right there and let's see what happens from this here. So we have a descending trend line in place, and you know how we treat our descending trend line. We want to be selling if price remains below the descending trend line, but if price remains above, it could further support an uptrend move. So will price come back to retest that entry? We don't know yet. If it does, buy pressure here will welcome more buying opportunities, and then we can add more the breakout of the 150.00 area. But if that is not the case and price drops to the downside below the trend line, then we will feel comfortable joining a sell. But definitely I will be giving us update as at when due. So this is my simple view on the USDJPY today. So mark out the structures. We will be needing them to guide our independent trading decisions today. If you have any questions, let me know in the comment section. I will take the next 5-10 seconds off, after which we'll come back to take on our last asset for this week. Stay tuned in. All right. So in the absence of no further questions, I want to assume we are all on the same page. So let's just jump right into the final asset on our watch list. Stay tuned in. So the final asset on my watch list for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a week we have here. We had a very beautiful week. That was last week, where we were able to be part of the momentum that broke the record of the previous record, and as of this morning we're having another record broken again as price action is testing the 2,736 level in the last 15 to 30 minutes or so. And this morning I've been able to take another buy position again, just to join that uptrend continuation, and I think it's running with about 80 pips in profit right now. For those of us who are going to be part of the go challenge, you will be seeing that position inactive. So at this point in time, well, well, all roads for the gold still leads to the upside, as all fundamental factors behind the scene still support buying, investing in the gold commodity, from easing monetary policy across all the major banks across the globe. We see major central banks are continuing to ease monetary policies, reducing interest rates. We saw the UK reduce interest rate. We saw the US, India, Bank of India reduced interest rate. Bank of Canada reduced interest rate. The ECB reduced interest rate. And I think this Bank of Switzerland is likely going to reduce interest rate this week or next week. That is, I'm not sure when their interest rate decision is going to happen. So this has further made the price of gold cheap enough to buy. So the more interest rate is reduced, the more the value of the currency asset of that economy decreases, making the non-yielding asset like gold become much more cheaper to buy. So at this point in time, the demand for gold is just skyrocketing. Now, secondly, the geopolitical tensions in the Middle East, the persistent tension in the Middle East, and uncertainty in the US politics offer additional safe haven support for gold. So right now, majority will definitely want to be putting their money on the gold at this point. Now, another factor I also see to influence the gold positively is the market conviction, which is currently growing in favor that the Federal Reserve will implement another modest rate cut coming next month. So everything is just, the path of least resistance for gold is looking very, very bullish. And of course, if we look at the latest development from China, where the People's Bank of China's recent initiative to support capital market are also seen as a positive influence on investor sentiment. And with all of this, I still want to bank on an uptrend for gold. But in as much as everything is looking very bullish, you know how we do it in this community. We always try not to get too carried away with the sentiment, and of course take into account the possibilities that sellers could also come in, that even the price of gold could also be capped due to some fundamental factors, and one of which could be the current strength in the US dollar, which remains very, very strong and continues to witness deep buying activity all through last week. So we don't know how the US dollar is going to perform this week. Will the momentum continue? If it continues, it may still put some dent in the gold. You know, when the dollar becomes very, very expensive, very high, it becomes expensive for other currency assets to convert to. You know, the gold, most of the gold is always pegged with a US dollar. So if that is going to be the case, we may see a little bit of capping of that upside trajectory. And of course, the increase in the US Treasury bond yield, which remains high at this point in time, could also reduce the appeal for non-yielding assets like gold. Now, another factor which is very, very important that we emphasize on is the overbought condition in the gold market right now. Psychological speaking, we are within uncharted territory, and when we usually get into this kind of area because of its unfamiliarity, major key players in the market who are taking advantage of that uptrend move may, out of fear, start taking some profit off the chart, and this could result into retracement move, choppy market condition, or even consolidation phase, and this could bring price to the downside. So we cannot ignore that possibility. So this overbought condition could make market participants hesitant to place fresh bullish bets. So with all of this information in place, let's go right into the chart and see what is going on from a technical standpoint. So I was not able to drop my weekend analysis on the gold for this week due to some unforeseen circumstances that came into play, but I will be taking us through from the higher time frame this time around to see how the market is doing from a long-term perspective before we go down into our execution time frame. So I started my analysis on the 4 hours time frame. Obviously, there's nothing to look out for on the daily time frame. We are within uncharted territory. There are no structural patterns to look out for. So instead, I went down into the 4 hours time frame, and right here on the 4 hours time frame, I took into account the character of price action since the month of September. That's about 3-4 weeks of historical data here, and what I was able to come up with is quite a simple and interesting trading setup you are seeing on your screen right now. Now, one thing first is this: we saw a significant breakout that happened last week out of the previous structure. The previous structure is this one. We had a descending trend line right here, and of course we have our key level at the 2640. So right here we saw price break out of both of the structure. That was a couple of weeks ago. To give a visual representation of that, we saw price breakout, did a couple of retests of that structure, and boom, it went all the way to the upside and kept on breaking the previous highs to emphasize the strength of the buyers in this particular market. Now, within this old trajectory of uptrend scenario that broke out of that structure, I was able to mark out an ascending trend line, which, as you will see, price is way far away from this trend line right now. So we have, after connecting the series of higher lows since the second week of this month, we have an ascending trend line in play, and as long as price remains above the ascending trend line, we definitely want to keep on buying this asset. Now, for in preparation for this week, while I was analyzing this market, this was the peak for last week. This was the previous record, that is the 2,723, as you will see here. That was when I did analysis. So I was hoping that, I was thinking, not hoping anyways, I was thinking that price could do some retracement move back into the trend line before that uptrend continuation happened. And as you will see, that was not the case. Instead, we saw price continue to find new highs, breaking out of the structure and continue to break the barriers. So what we are going to be doing now is scale down into our execution time frame just to see how the market reacted or played around this 2,723, which was the highest point for last week. Now, when we scale down into our execution time frame, it becomes a little bit easier for us to navigate. So I will zoom right into where our center of focus will be. So first of all, let me talk about this trend line here. So you can see from last week Thursday, you can see a uniform trend line as price found higher highs and higher lows. So I have one beautiful trend line to guide our trading decision for this week. So that is it right there. You want to be having this trend line marked out on your chart. Is going to be playing a significant role in guiding our trading decisions today. Now, in addition to that trend line was this beautiful structure we have here, where the week started on a bullish note. As you will see, price started somewhere around the 2,721. We saw price rise up into the structure, then we saw resistance here, price dropped back into the trend line, and it was at this point I bought the XAUUSD, and since that moment I've been enjoying the move all the way up, having two buy positions running right now. The first one with 120 pips, while the second one is running with about 33 pips in profit. And for those of you who actually used our analytical approach to identify this trading opportunity and you actually took it, well done and kudos to you on that one. So you do want to be moving your stop losses right now, and I will be suggesting that anywhere around the $72,727.50 level seems most appropriate to move all stop losses to, as it's going to be below this ascending trend line. Remember, we do want to be giving enough breathing space for price action to move around. Now, for those of us who had missed out on this opportunity, well, let's exercise patience. Like I usually say, you don't want to be jumping in front of a moving train, but instead you want to wait at the next bus stop where you can board the train comfortably. So at this point in time, since price action has broken out of this new high here at the 2,733, let's see if the market will come back and retest the structure, which lines up with that ascending trend line, and the appearance of buy pressure here will be all we need to continue the uptrend move. So that is how we are going to be joining this if you had missed out on the first couple of buy positions we've identified here. So there are no structures to look out for. Remember, we are within uncharted territory. No structures to look out for. Let's just keep watching, and for every retracement move we see, we will see new structures, and I will definitely update you accordingly on my Telegram platform. And for those of you who are going to be part of the Go Challenge, we are going to be looking at this together. I have a position running on this on my scalping account. We are going to look at how we are going to be navigating this one today, so you don't want to miss out on today's session. Now, in terms of selling the XAUUSD today, like I did say earlier, this ascending trend line is going to be playing a significant role. And to consider selling the XAUUSD, this trend line here needs to be breached and broken to the downside. So I would like to see price breakdown, retest the trend line. Remember, we need a retest for confirmation's sake before jumping into a sell. But at this point, I doubt if it will happen. But if it does happen, let's be on standby to capitalize on that opportunity. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. But if I didn't, feel free to let me know in the comment section. I'm willing to be of help in that regard if there are any form of clarification needed on this current position. So I will take the next 5-10 seconds off, and let's see if we are good to go, and we shall go ahead and round off the session for today. See you soon. So in the absence of no questions, I want to assume that we are all on the same page, and it has been a wonderful moment with you guys. I really appreciate your time, and I do hope that this week will be as fruitful or even much more fruitful than what we saw last week. Maybe we are going to see some phenomenal move on the gold commodity today, and of course our newly introduced asset, that is the USDJPY. Let's hope we're going to see some significant move on that one too. So we were able to take on all of the three financial instruments on my watch list for this week, which includes the USOILSPOT, where we identified a simple setup. We have a couple of buy positions currently running on that one. We have the USDJPY, we have a buy position running on that one. I mentioned we move our stop loss to secure some profit, and of course on the XAUUSD we also have a buy position running there too. So for those who are going to be part of the Go Challenge, we will do our follow-ups from there. And so for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you have done so, you do definitely want to be part of our subsequent editions, as the more time you spend with us, the better you get to understand, comprehend my analytical approach, which eventually will be of help in making your own independent trading decisions. So try to be part of the next session. Wednesday session, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the second half of the week. I see your comment, Odueno. You're very much welcome. Glad to have you around with us this morning as well. So it's on this note I want to wish us all the best of luck today, and always remember, every decision we make in the financial market is an educated guess, not until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. Ensure that is happening all the time and be consistent through all the positions you open on your portfolio. So I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.
Bye.